All right, folks, what's up? It's Eric from Option Edge, and we're going over some more earnings trades using the Likefolio proprietary social media data. Likefolio mines data from sites like Twitter and gives companies rankings based on what people are saying about the companies. And it's decently predictive, and I say decently because, for example, here was a very bearish Wix, had a very, very bearish score. And they just announced earnings, and let's check out earnings. It's up almost 15%. So had you followed Wix, had you followed their call on Wix, you would have lost a lot of money. Moving on, so we did the I took the Coinbase trade yesterday, sold a put spread in Coinbase. It fell about 5% yesterday before earnings. Was just announced yesterday after the market closed. It had a neutral. It didn't really move. Basically, it stayed where it is. It's maybe up 1%. So had you sold a put spread outside the expected move underneath it, you would have made money, and that's what we did. So that was a win. Let's go. Since the market right now is pretty bearish, it seems like we just had a big red day. I'm looking to short companies that have very negative results. None of these really interest me. Maybe Alibaba could be something to short, but I'm looking to short Unity for sure. Basically, any type of tech, and basically their reasoning here is very interesting. Weakest earnings score on the ticket. Predictive demand slides to a 10-year low. Mobile gaming market facing slowdown, 8.5. Price to sales ratio way above industry average. Insider selling activity doesn't add confidence. So I think the stars are really aligning for this stock. It makes me want to buy an out of the money put, but I'm going to stick to my probably call spread strategy, selling call credit spread outside the expected move. So Unity is one of them on my radar, and then let's see what else we got. Then basically the other two that are on my radar are Beyond Meat and Open Door. Open Door is a $2 stock, so it's gonna be hard to that might be hard to short or sell a put spread just because it's when you only have when the stock's that low, it's difficult. And here's Unity. I'm out to the March 17th expiry. If you wanted to get short this, you could get less aggressive by selling outside that expected move. Let's say we sold 5 strikes wide. That's going to give you 70 cents. That's not the best risk reward, but your probably profits 82% there. Let's say we want to move this in to get a little more aggressive with it. It's trading at $36, $36.50. We move this to this is a little more aggressive, and we're splitting the strike width is in half, so it's only 2.5 wide strike. So this is, I think, a pretty good risk reward here because we're risking 178 to make this 72 with probably a profit of 70. I think that's a good risk to reward there. It's a little bit aggressive, but I think that might be a good play as well. So here's Beyond Meat. Beyond Meat is currently trading at $16.40. This is the February 24th, so these expire in 3 days. What you could do, like I like to do, is sell outside that expected move for a strike, for a $1.50 wide strike. You're getting only 22 cents. I would like to get a little bit closer to the money. Let's do $2 wide. 72 probably profit. $42 risking for 158. I don't know if that's exactly the best risk to reward. Another stock that we have on here is Block or Square. So this is a pretty negative report here. This is the write-up PayPal's post-report slide foretelling. I actually didn't. This is what it says about. So here's the write-up. It says PayPal's post-report slide foretelling. So PayPal was down after it announced earnings. Comprehensive demand is down 22% year over year. Cash App buzz down big from last year. Payment volumes, revenues have slowed. PayPal shop competition forces for product development spend. So let's go into a couple different charts and analyze Square. So here's the 18-month daily chart of Square, and I'm using Pattern Finder, which is an AI charting software. It draws in lines and things of that nature based on previous consolidation zones. So for example, right here around $85, $87, you can see we have this pink strand here, which is just a consolidation zone. You can see the stock has touched this point many times in the past. So it's sort of a support resistance here. Since it's above, it's serving as resistance, overhead resistance. And then we're in this channel. So, but since we want to get short this stock, I think, 85 is a little bit too far out of the money for us to get any type of juicy credit. So we're going to go down to the scatter plot. This is just plots the different moving averages. So right now, Square is just above its 200-day, just above its 50-day, and it's below its 21 moving day at $77. Its 10 days at $76.50 about. So it's got some overhead resistance. So let's see how we can use this to our advantage. All right, so here is Square's options chain. So the 21-day exponential moving average is right around 77. A 3-strike wide call spread would be we're risking 74 to make. We're risking 226 to make $74. Pop 73. If you wanted to, maybe bump this back one. $47 to make, risking 153, 75 pop. I sort of like that. Gives us a little wiggle room over that 21-day exponential moving average, and we're only 2 strikes in the expected move. So hopefully that Lightfolio data works for our advantage, and we can profit here.